Hey everyone, my name's Joe Pivarunas. I'm the founder and managing editor of Nanalyze. We're a boutique media and research firm that covers a variety of disruptive technologies in areas such as artificial intelligence, the Internet of Things, synthetic biology, gene editing, nanotechnology, and of course, robotics. Today, we're going to talk about a company called Knightscope that's building robotic security guards. And you can see a number of the contraptions here on the screen that they're building. Now, this investment thesis is particularly relevant today, and that's because there's been a spate of crime in the United States that's been attracting some attention. So, Best Buy recently announced their results, which were not as good as analysts were expecting. And the CEO was talking about how organized robberies are infringing on Best Buy's margins. Now, if you're not familiar with how this works, it's like a flash mob, except you're robbing stuff, right? So you'll get about 20 or 30 people, they'll file into a store, and now that everybody's wearing a mask, it certainly becomes a lot easier. Get about 20 or 30 people in a store, they start stealing things. In most large stores, you'll have a couple individuals dedicated to loss prevention. They may be sitting there behind some windows or watching some television screens, and usually these people will act very fast. They'll grab as much stuff as they can, they'll run out the door, and nobody can do anything. Now, to add some complexity to the problem, workers at Best Buy that have tried to do things have actually gotten in trouble for it. And we had looked into this for the article that we wrote on this, and we thought it was a bloke. Well, it wasn't. It was actually two people that got fired, and one of them was this lady that you see here on the right. This is a video that's certainly worth watching. You can see here, is keeping this thief from going out the door, and she must play rugby because she's a hell of a tackler. And that guy, he didn't make it out with the merchandise, and she was fired for that, right? Because she put her life in danger to do that, potentially other people's as well. Well, the UFC hired her, and good on her, right? So she did a great thing. Now, if this was the Philippines, you'd have a couple guys with shotguns sitting at the entrance. That's pretty commonplace in a lot of third world countries, and maybe that's where this is going. But what we're here to talk about is the use of robotics as security, and maybe they can free up some bodies by having robotics or robots watching things. Now, everybody can understand that thesis pretty easy, the idea of a robotic security guard. So what that lets Knightscope do is raise money from retail investors. Now, most startups will go out, they'll present their business case to venture capitalists who will then fund them, and then the company grows accordingly. Now, more recently, there's been what's called a Regulation A or A plus, and this is equity crowdfunding, and it is what it says on the tin. It's a firm that goes out and says, we're going to raise money from retail investors. Now, recently they actually raised the amount of money that retail investors can throw at startups, and we think that's a very bad thing. And here's why. When you go to raise money from VCs, you're not just looking for the money as a startup, you're looking for the expertise and the connections that they bring. So, as a retail investor, you want to be investing alongside VC money, not as a replacement for it. We can think of a firm called Alumni Group that lets you do that. Now, you have to be an accredited investor, and we think you should be an accredited investor. None of this put $500 in your credit card stuff that flies today. A group of random people, and we're talking about people across the globe, can't coordinate the due diligence needed to vet these opportunities. Not only do they lack resources, but they lack the expertise. Think about how many opportunities a VC sees and vets, and that over time, that experience helps them figure out which businesses are more likely to succeed. Because guess what? And this is with VCs vetting, 1 out of 10 startups has a liquidity event. This is the numbers vary, but generally speaking, if you're a VC with a portfolio of companies and you've got 100 companies, 3 are going to be your winners. One of those might pay back the fund. So when you go and invest in just one startup, you're taking a lot of company specific risk, and the odds of that company actually having a liquidity event are very low. As a matter of fact, there's nothing guaranteeing at all that there will be a liquidity event. And guess what? If you're holding shares of a company and you can't trade those shares, they're worthless. So crowdfunding appeals to retail investors usually when it's a business that's easy to understand. You'll see firms like Miso Robotics, and Robot that flips hamburgers, that's another good example. So Knightscope, robot security guards, we can understand the idea, the thesis. We first came across this firm back in 2017. We looked at them again more recently in 2018, and this is a story that ran in the media around that time about this robot security guard that offed itself and dove into the pool there. At that time, Knightscope as a company was talking about how they're going to streamline their sales process and they're going to reduce costs, they were going to scale and grow, and they're going to reach profitability, and that they weren't looking for funding. So at that time, that was 3 years ago, they had raised about $25 million. Well, that didn't last very long. So this past spring, they've now have raised a total of $64 million, over 64 million, using equity crowdfunding from retail investors, 28,000 different investors, and now they're looking to raise more. So when we always look for a company management team to do what they say they're going to do, and when they don't do that, that's a big red flag. And we're going to talk a little bit, give you some other example of that later. Now, this was in their most recent SEC filing document. It says if they can't raise equity, they're going bankrupt by the second quarter of 2022. So not only are they having to raise money again, and when they said they didn't have to, but it's also pretty critical because if they don't and they go bankrupt, those shares are worthless anyway. So the deal that they're doing right now, and this is right off of Start Engine, we just cut this. We've drawn a little arrow there on the lower left, and it says our public listing, and it says NASDAQ KSCP. We think that's very misleading. These shares are not publicly traded. There's a plan for them to be publicly traded, but they are not. So having that little note there, we think is misleading. Now, if you look at the deal terms, they're trying to raise 40 million. All right. So that means they'll have raised 100 million if they raise that total amount. They want $10 a share. And again, the price of a share is completely irrelevant. It's the valuation. So they're raising at a $535 million valuation, which is very, very rich, and we'll cover that in a second. It looks like about 1,433 investors have gone in on this, and you need a $500 minimum. And at least some of the platforms that we've checked out, you can use a credit card, which we think is just ludicrous. So they're going to try to raise $40 million, and then what they plan to do, and you need to pay very close attention to the nomenclature. Knightscope intends to publicly list on the NASDAQ. And you can see down here the disclaimer that says subject to NASDAQ requirements. Well, of course, right? I intend to become a millionaire, but it's gonna be pretty damn tough. So this intend to doesn't mean anything. So they're looking to raise another $40 million, and then they intend to have to list on the NASDAQ. Now, we went to their website after seeing that, and this chat bot popped up. Well, it says this William Santana, this gentleman is the CEO and chairman of the board. Now, if that was actually him, then what is this gentleman doing? He doesn't know us from Adam. We didn't say anything about ourselves, and he's chatting us up. So if it's actually him, that maybe he probably has some bigger fish to fry. If it's not him, then that's a problem as well. So we had a brief chat with him. Once you engage that chat bot, it takes like 15, 20 minutes, and then this gentleman comes on board. Now, we don't know who is behind the chat bot, but let's assume it is what it says. So we asked him and said, is there any guarantee that the shares we purchase will be listed on NASDAQ? And we made reference to an electric vehicle firm called Acromoto that did a Reg A and actually listed an IPO with a Reg A offering. And he confirmed that is what they intend to do. Now he says, nothing in life is guaranteed. Legally, as an officer of the company, I can't make promises. Understood, fair enough. And then he mentions that a handful of companies like Acromoto have taken that Reg A route. And he says, we have 28,000 investors. And this next line, you got to pay attention to. It says, we wanted to have them have first crack at it. Main Street first, Wall Street second. Well, guess what? Anytime somebody talks about democratizing access to wealth, they're pissing on your shoes and telling you it's raining. Robinhood's a great example of that. Robinhood's democratizing access to wealth. Well, Robinhood makes the majority of their money selling crypto and options. These are extremely speculative assets, and nobody's getting wealthy over the long term on this garbage. So whenever a firm starts making references to Main Street first, Wall Street second, we always raise our eyebrows when we see that. Now, why we're suspect of this goes back to this is an article by IPO Edge, This was from July 2019. You can see the highlight there, and you can read for yourself. Shares available to retail investors effective immediately as company prepares for public listing on NASDAQ. This was another Reg J offering that they did. You can see that here in this release. It says the company plans to begin preparing, planning to plan an S1 format, Form 1A on NASDAQ, et cetera, et cetera. It says the ticker symbol KSCP has been reserved by the company on NASDAQ, and it's still reserved today, and they're still planning to plan. So that earlier example of listing that ticker symbol there and implying that this is anywhere close. Well, we don't know how close this is. And until they actually list, until there's a way for you to sell those shares, and if you're one of the 28,000 investors who've put their money down on this thing, these are the questions that you need to be asking. When are they actually going to list on the NASDAQ? So when we look at the progress this company's made, it's far from impressive. They got a long way to go. So they've had some robots deployed. You can see here the revenue is just growing at a snail's pace. Now, the green bar that you see there that says meaningful revenues, we consider $10 million a year, which is quite a low number, to be meaningful revenues for a company. Well, they haven't even broke $4 million a year in revenues. That's a very, very small number. If this is a big opportunity, a big blue ocean total addressable market for security robots, you better be growing that at double digits at a compound annual growth rate of at least 10%, 12%. You can't grow in such tiny increments. Otherwise, you're not capturing market share and somebody else will be. So they have a long way to go when it comes to demonstrating meaningful revenues. And when we look at a company and value it, we use a simple valuation ratio that anybody can use. Market capitalization divided by annualized revenues. In this case, we're taking that earlier $535 million valuation, and then we're dividing it by what they've brought in for the first half of 2021, annualizing that by multiplying it by 2, and then dividing the market cap by the annualized revenues, and we get 150. That's very high. We won't touch any stock. I don't care what the story is. We're not going to touch any stock that's over 40. That's a rule that we have, a nice objective rule that keeps us from overpaying for companies. So if you do the math, if you work that out, work that backwards, that means instead of the $10 a share that they're asking in the offering, we would start looking at about $3.18 a share. So it just goes to show you that you're not only buying a company that with shares that you can't do anything with right now until they have a liquidity event, but you're also overpaying for those shares. Now, another problem that we have with crowdfunding, and we're not just picking on Knightscope, we're telling you that any firm out there that does crowdfunding should be avoided like the plague. The people that we see getting involved in these crowdfunding investments are not the sort of individuals that should be dabbling in this stuff. So a lot of them, they say you should always worry about people that have nothing to lose. Well, a lot of these people don't have anything to lose. They don't have much money in the first place. They say, well, I'm going to plunk it down. It sounds like a good idea, and I'm going to have a go at it. And they're usually newbies and very, let's say, uninformed about what they're getting themselves into. And you can see the popular searches here. Knightscope stock price. Well, you wouldn't really search for stock price unless it was publicly traded, right? Nor would you search for stock symbol. You should have known before you invested that it wasn't publicly traded. Stock review. Well, not many people are reviewing stocks. So you can see, what is Knightscope preferred equity worth? What is my stock worth? What's the stock symbol? These are very basic questions that you ought to have. You ought to not be asking Google for the answer to these questions. You ought to be able to be looking at that 28,000 people. These are the sorts of things they're searching for, and that's concerning. So, people that have been looking at some of the videos we're posting on YouTube have been very critical about the fact that we don't talk about the bull thesis, and that's because the bull thesis is a given. We know that replacing security guards at $14.78 an hour with a robot that costs $6 an hour is a great idea. We know the value proposition. The bull thesis is very obvious. We're always focused on the bear thesis. Now, if you just want to sum this up, shares of any company are only worth what someone else is willing to pay. And if there's no buyer, your shares are worthless. So illiquid investments are really the bane of crowdfunding. And until that ticker symbol, KSCP, goes live on NASDAQ, these shares are worth nothing. So that's what existing investors need to be focused on. Now, if you'd like to read more, we've done quite a bit of research. Our older piece in 2018 covers the bull thesis a little bit more. And our more recent piece looks at some of the things we've talked about today. Both of these research pieces are free to read. So go ahead and you can go to our website, nanalyze.com, and Google the word Knightscope and pull both these up. Take a look at them. They're free to read. And of course, we pay our research team, we pay our bills through our premium subscription offering. And you can look at here and find some information about that as well. So thank you very much for taking the time to join us. Please subscribe to our YouTube channel. We'll be putting out more videos as time goes on. Thank you for joining us, and we'll look forward to talking to you in the future.